Welcome back, traders and investors. We have Michael Pachter, research analyst at Wedbush Securities, on the line. Michael, how you doing today?
I'm good, thank you.
Before Dennis says hello, I know a Rabbi Pachter. Do you have any relatives in the Michigan area?
There are two big families with that name. One settled in Chicago and one settled in New York. So I'm from the New York side. Probably not related.
Okay.
Although my great grandfather was a cantor for years.
Okay. All right. So there's a parallel. Dennis, you want to say good morning to Michael?
Hi, Michael. How you doing here?
Good
I'm
morning, Ted.
gonna be very interested to get your thoughts on Facebook here today with I don't know if you saw the headline going by, but they're gonna put auto playing video ads into their
I have to
news
say,
feed.
we're actually going to transfer coverage of Facebook, LinkedIn, and Twitter from me to one of my colleagues,
Okay.
effective today. So I'm happy to talk about it, but it won't be too relevant soon.
Okay.
Okay. Just going back, how did you end up in the video game, digital media, and electronics sector?
Oh, I'm a ridiculously old guy who had a I don't know 18-year work history when I came to work here, and I had been variously a tax lawyer and many different finance positions, and I ultimately ended up being a M&A investment banker, and was unemployed due to just a ethics disagreement with the guy that I worked for. So I found myself without work, and a friend of mine connected me with Wedbush, who was starting up a research practice, and I ended up actually heading up the department and kind of staffing it. And one of the people I hired to cover games was really good at it, uh, and left in 2001. And I thought that I could step in and take over his coverage. He hadn't been covering that many stocks, so I picked him up because I'm kind of a lifelong gamer, and at the time it seemed a lot simpler than it turned out to be. And after a couple of years, I realized I was pretty good at it, so I stopped being director of research and started focusing full time on being an analyst. And serendipity, I mean, I kind of expanded from games to other things, primarily because in 2000, Bill Gates articulated his vision for connecting everyone to the internet through their living room and having the Xbox be the internet hub. And I think he probably had grander aspirations thinking about e-commerce, flowing through your TV. But it was crystal clear that if you had a functioning PC attached to your television and connected to the internet, you could at a minimum consume entertainment. So you could consume games for sure, and music and movies. And so I started covering companies that provided those types of services, and I now cover Netflix and Pandora and LinkedIn, and I actually cover a bunch of companies that I think will ultimately be put out of business by that digital threat. So Best Buy and GameStop, who I actually like, but I think at the time I thought they might go away. Amazon, who's a participant in that whole process.
So it's interesting. You mentioned that you were a video gamer as a kid, and you mentioned that you're old. I'm probably I'm older than you, most likely, and like the
57, 57. I'm sure you're not older than me.
Okay, all right. Well, I'm up in that area, but the video games they had when I was a kid was like pinball and Pac-Man and asteroids. I remember on those pinball machines, that you could you could play them, and if it looked like you were gonna drain, you could hit the thing real hard, and a lot of times I tilted it, and then it took away all my points. But were you a video game? You mentioned you were a video gamer with a kid. Was it like it? What Pac-Man,
Well,
pinball,
I certainly
asteroids.
I certainly played pinball, with real balls in actually the bowling alley, and my parents thought I was there to smoke, and I was actually there to pop quarters in the arcade the pinball machine. And I remember actually seeing Pong in '72 or '73, and I was in high school. I remember, for example, the day that John Lennon was killed, which was 1980. I was at a pizza place, and I guess I was 24. I was at a pizza place playing asteroids. I totally remember exactly what I was doing when I heard him that he was killed. So yes, yes, and yes. I played Donkey Kong. There's a great documentary called A Fistful of Quarters about the world's champion Donkey Kong player. Hilarious and serious, but hilarious video. And I wasn't that good, but I was pretty good. And I played Galaga and Galaxian and Defender. I played all the original, arcade games, Mortal Kombat. And then I bought every console made. So I think my first one was, I had an Atari 2600 in probably the late 70s. And then I had a Nintendo Entertainment System in 85, Super NES in 90. I bought the N64 and the PlayStation 1 in 97 and 95, respectively. And then I've owned every console, and I've had the Dreamcast, the Genesis. I like games, and fortunately, tolerance for adults playing games has grown in the last 30 years. I was like the oddball kid, and my parents gave me grief for not doing something productive with my time. It turned out, worked out okay for me.
So when you play these video games and you find one that you really like, do you look at the company then, as potential to obviously buy the company, or just curious how your thought process goes?
No, as far as stocks, no. I'm definitely not a game reviewer, so
Okay.
my taste is kind of irrelevant. I just genuinely like games, and so I think my affinity for them it causes me to actually, it caused me before being an analyst to actually pay attention to exactly what they do, how they're made. It's sort of like being a political junkie. Like I know everything about, I voraciously read about politics. I have no intention of running for office, nor do I want to change policy. I just think it's fascinating. I was that way with games because it's something I have an affinity for. So no, there are fortunately hundreds and hundreds and hundreds of review sites, so it's pretty easy to figure out if a game is good or bad. And I think this is accurate. I think that the video game industry is the second best covered industry by the media after filmed entertainment, and probably better covered on the internet than filmed entertainment. So there are more people writing more words about games than anything except movies, and I think probably more on the internet than in any industry, than covering any industry. So there's a ton of information out there, and it's really easy to find.
Now, you mentioned off the hop that some of these companies obviously are starting to struggle here as stuff more goes into the cloud, as stuff more goes on the internet. And you actually mentioned Best Buy, which I just found interesting, that you were saying that Best Buy may start to struggle here too. What's your thought process there?
Well, I have a sell on Best Buy, and it's really because I think that the steamer is not only heading for the iceberg. I think it's hit it already, and I think that the captain and the CFO, so the CEO and the CFO, are bailing water with a bucket as quickly as they can, but the ship is taking on more water. I just don't think investors have figured that out yet. I mean, the truth is, Best Buy's media business has been dying for years, and I don't think that anybody even talks about it anymore. But the sale of DVDs and CDs and games have been in a state of persistent decline for the last probably 8 years. And they've comped negatively in those categories for literally probably 8 years. That's just never going to turn around, and I think everybody appreciates that. I do think that there is an onslaught from the bottom, not from the top, on their business, because I think that as consumers increasingly avail themselves of internet retail, they will buy kind of brainless purchases, not the ones that take a lot of thought like a television, but brainless purchases like batteries or iPhone cases on the internet. And so I think that Best Buy as a destination for far more trivial, routine purchases like the car charger for your phone when you get your new phone, they're losing traffic like crazy, and it's because internet has made it so easy to get that stuff. Amazon recently put out, this is a classic Amazon statistic, that they added millions of Prime members in the September quarter. They would only confirm that millions was plural and it meant 2 or more, and they won't tell you if it's 10 or 2.1. But the point is that Prime has been around long enough that if they added 2 million in a quarter, they're very likely at something around 20 million, and they could be 30, but they're up there. And if there are 20 million people, likely 16 million or so in the U.S., so literally 15% of households with a Prime member, those people aren't buying batteries or print cartridges or Halloween candy or anything routine at retail any longer. And Best Buy is probably squarely in the sights of Amazon. If you think about Amazon's product mix, I am certain that the largest category at Amazon is the consumer electronics and home entertainment categories. So Amazon carries every single product that Best Buy carries, except for the white label Best Buy branded, Dynex brand or Insignia brand. But they have comparable products at significantly lower prices. And my personal anecdote, I literally just got an iPhone 5S about 2 weeks ago, and I got it at work. So all I got was the phone in the box, and it comes with a cord and a set of earbuds. So I bought a case, I bought a Mophie charger, I bought 3 Belkin 2-port car chargers, which I highly recommend for anybody who has multiple phones in the household, because you can plug in 2 different cords and 2 different people can charge at once. Everything I bought was significantly cheaper than on Best Buy. And although I know that Best Buy would match price, why would I bother? I'm on Amazon. I'm a Prime member. All the stuff was going to be there 2 days after I got the phone. I could manage not to drop my phone for a day, and I did have a charging cord for the first day. And like clockwork, 2 days later, that package arrived. The Mophie charger was $91 versus $119.99. The Belkin 2-port chargers were $13.15 versus $24.99, and so on. I mean, there's just no reason anybody who has that kind of an experience on Amazon is ever going back to Best Buy for those products. So I think Best Buy is going to see, probably over the next 2 or 3 years, about a 10% decline in its traffic. And that might not equal a 10% decline in revenue, because I think these are lower end products. Probably more like a 3 or 4% decline in revenue, but it's the highest margin revenue. If I bought a Belkin charger for $13.15 and it's $24.99 at Best Buy, certainly Amazon didn't sell it to me at a loss. Certainly they probably bought it for 10 or 12, but Best Buy is losing $12 or so of profit, and that's going to bury them. I literally think you're going to see Best Buy gone in 5 or 6 years.
Wow.
So Dennis and I mean, we're technical traders, but we also like to pay attention to the fundamentals. And you have a company like Amazon that just has this outrageous, valuation. How do you approach stocks like that? I mean, correct me if I'm wrong. Have they ever made money?
It's a great question. Yeah, Amazon has made money, and actually relatively consistently. The problem is they don't make very much money. So, back in 2010, when they had $34 billion of revenue, they made about $1 billion in net income. They made, high $2, $2.50 or something. Now they're doing this year $75 billion or $74 billion in revenue, and they're making something like half that, $500 million in net income. So they've managed to grow revenue by $40 billion, and their net income has actually gone down. And so I understand why fundamental investors look at that and say, why is that good? I think the point is that the 34 grew to 74 and is widely expected to grow to 90 next year. So that giant growth in revenue, it most definitely is throwing off gross profit. And Amazon has taken that incremental roughly $10 billion of gross profit that they've thrown off, and they've reinvested it in many, many things. I mean, one thing, $1 billion or so of that, is buying streaming content for Prime members. And we can argue about whether that's smart or not, but they're doing it, and that makes the Prime membership more valuable if you're a Prime member. Another big chunk of that is the subsidies that they offer on Kindles. And we can argue again about the lifetime value of a Kindle owner, but Amazon has concluded that it's worth subsidizing a Kindle by $50 or so. I think they claim to break even on that business, and maybe that's with all the book downloads. But I have a feeling that's where a big chunk is going. Then the last giant chunk is going on infrastructure, which is web infrastructure, Amazon, to build Amazon Web Services, and distribution infrastructure to expand their offering to everyday products like groceries. And again, I don't think they're going to make a ton of money on these product categories in the near term, but I think one day when they suddenly just stop spending, all that incremental spending drops to the bottom line. So that 10 billion in gross profit they spent, if they revert back to just running the company the way they did in 2010, assuming that it doesn't hurt their revenue, just assume they don't grow any longer, they're going to make $10 billion more, which is something like $13 a share. So stock's trading as if they already make that, and I get that, and I
I gotcha.
I have a neutral. I have a true neutral because I actually think it's hard to start a position here, but it wouldn't shock me in 5 years if this thing was $1,000 stock.
Wow. So will other companies benefit if everybody keeps moving from like going and driving to Best Buy? If they're all going to Amazon, will companies like a FedEx and UPS continue to benefit from stuff like this too? Because I mean, people have to ship this stuff, right? Or is there other
Yeah,
companies?
I think that's right. I mean, one of the things Amazon's building out, because of groceries, is its own delivery, capabilities. So they actually have trucks. But
Oh
yes,
wow.
you're absolutely right. For the small stuff, when I buy my car chargers, they come in a little box, dumped off by FedEx local or UPS
Not by
local.
a
So sure, those
drone.
guys.
Not by a drone.
Not yet. No, I think the drone thing sounds really cool, but the FAA regulatory process. I know that Bezos said it would be at least 2 years. I think the FAA regulatory process is going to take 10, and I really think the real problem with the drones is the novelty to a kid, with a BB gun. I mean, I just think that's a problem. I mean, they're potentially a hazard. I do think ultimately the drones will be just like pizza delivery. So you can order something by drone if you're there when the drone shows up, and I think that would make sense. So they can very safely, you can kind of coax it in and turn on your phone or something, so it's got a GPS locator. But other than that, I don't know. But it'll be 5 years or more, I think.
Now you cover LinkedIn too, correct? There, Michael.
For another
Oh,
hour or two, yeah,
oh yeah,
moving
you're moving them. So
every
well,
day.
let's get your last thoughts here on
LinkedIn,
some of these.
Facebook, and Twitter.
Let's get some of your last thoughts here then on some of these social media stocks here, because everybody always asks us questions on the Facebook and the Twitters and the LinkedIn's. And again, it's a valuation thing here. It's difficult, obviously, to look at these from traditional methods of earnings and stuff to come up with values. How do you approach it?
It's funny. Twitter has something like 1/8 the revenues or so, depending on what you believe in consensus forecast for next year, and not no profits, and is trading at about something like a quarter of the value of Facebook, and Facebook is immensely profitable already, and they're growing really fast. So there's a mismatch there. I think that if Facebook were valued at Twitter's valuation, it would be over $100. It's hard for me to tell you that Facebook's worth 100 and Twitter's worth what it's trading at. My target on Twitter's 37. So I think Facebook, logically probably trades up another $25 if Twitter stays in here. So I like it a ton. LinkedIn is really kind of it's an odd stock. I mean, it ripped from 100 to 220 or 250, I guess it peaked at in April, and it really hasn't done anything since. I mean, the market's up a ton since April, and LinkedIn hasn't budged. So I think what LinkedIn is beginning to show is signs of slowing growth. I think the interesting thing about LinkedIn is that they have a great business and a flawed model. And when I say that, the people who posted resumes there aren't going anywhere. It's the only legitimate place you can actually look for work, and your employer doesn't care because it's monster.com, but it's cast as a social network where we're networking and meeting people. Nobody I've ever met actually meets anybody on LinkedIn, but everybody's on it in case they need a job. Where LinkedIn screwed up is they chose to charge a subscription fee rather than a success fee. And so if you are a recruiter and you place one person a year and you get a $25,000 commission, maybe you won't pay or $10,000 a year in LinkedIn subscription fees. But if you're placing 25 people a year, of course you will. And the point is that LinkedIn charges the bad recruiter and the good recruiter the same amount, and that's just stupid. They should have variable pricing based on how successful you are, how frequently you use it. And same with companies who are employers who are looking for talent. General Motors pays the same, for a site license, and Facebook pays the same for a site license as the mom and pop grocery on the corner who hires one person every 10 years. So they need to make it really variable pricing based on use, and I think that the opportunity is several times greater than the market is priced in.
Mike, what about Facebook? I mean, obviously they're moving into the advertising arena, but last quarter when they released the metrics on their users, there was a really decline with in the teens and the teen loss problem. Do you see that being a sore thumb for the company going on down the line?
I think probably the biggest problem with Facebook right now from an investor perspective is the CFO is not very articulate. What he said was that teen usage was flat, and he said we saw a decline at the younger end of the teen range, and he didn't say this, but if you have a decline at the younger end and overall teen usage is flat, that means you had an increase at the higher end. And of course, he's not articulate enough to have actually made that clear, and the stock got crushed after that call. But the truth is that you don't need Facebook when you're living at home and every single person in your universe goes to the same school as you and you see them every single day. You need Facebook when you're us and you've been out of college for 35 years and you haven't seen any of your friends for 25, and it's a really easy way to reconnect. So Facebook was invented by corny college kids who wanted to know who that girl from Michigan was sitting in their class, and it expanded to other campuses because every kid at Harvard on Facebook had friends at other campuses, and it spread virally among the adult population because we all have friends that we haven't seen in a long time. So it's a great way to reconnect. All adults get that. Most teenagers don't, and for some perverse reason, investors are completely clueless about this thing, and they hang on every word of what the CFO says, and they think just like I would tell you at Best Buy, if no teens went to Best Buy, you would agree it was dead forever. They think, oh, teens aren't using Facebook, therefore Facebook is dead. That is stupid. When teens move out of the house, they will join Facebook because there isn't an alternative that actually works.
Michael, just to bring you off to Facebook, what stocks do you think, just to kind of finish it up here, what stocks do you think that you cover that are the most undervalued right now? Because we've had such a run in the market, and I get this question all the time. It's like, has the market gone too far? Is there still value out there in some stocks? Like you mentioned Facebook, you think there's a lot of value there. Is there other companies that you are looking that are really undervalued here right now too?
Yeah, there are. The game guys, when you look at historical game valuations, the publishers, they've traded at a premium to the S&P 500. And back when I started covering them, there were 11 public companies. There are now 5 that are real. I mean, Nintendo is a hybrid, but there's Activision, Take-Two, Electronic Arts, Ubisoft are the 4 big ones, and there's a smaller one. But those guys, there are fewer of them. The market opportunity is every bit as great as it's been in any cycle, and they're trading at a discount to the S&P 500. So I'd say if you just get a reversion back to kind of mean relative values for the group, they're going up 25%. And I think that with a greater concentration, with consolidation in the group, and it's really been through other companies going away, but with consolidation, I think the opportunity for the survivors is even greater. So this console cycle is going to be a big deal. I think Activision's got at least 50% upside in the next 2 years. I think EA is a double in the next 2 years. Ubisoft is coming off of a screw up, and I think they're probably 50, 60% upside stock. The one that's harder to peg is Take-Two because they had immense success with Grand Theft Auto. That's impossible to replicate, and we have no clue what else they're working on. The management team is not particularly forthcoming with the release schedule. I can tell you every game that Activision and EA are making next year, and I can only tell you that Take-Two's making a basketball game. They have not announced anything. So it's hard. It's like valuing a movie company without knowing what movies they're going to release.
Okay, you made a statement, I believe you did, that by 2050 that all video games will be streamed from the cloud. So this probably leads to your bearish thesis with the retailers. Are you sticking with that? And what companies do you think that will benefit from games being streamed on the cloud?
Yeah, there will be physical media as long as there's demand for physical media. So it's hard for a publisher or to say we're not going to allow the consumer to purchase a game in physical form if he wants to. And just to point out that Napster, Grokster, and Kazaa in 1997 destroyed the CD business, except that CD sales were 200 million units in the U.S. last year. So they're still 20% of where they were at their peak. And the idea that we still not only have CDs, but they sell hundreds of millions of them is kind of crazy. So maybe games will still be made if there's still demand and the publishers think they can make money. But it makes eminent sense for the publishers to cut out the console manufacturers, not pay a royalty there, cut out the retailer, not pay a margin there, and deliver games directly to the consumer. And I think physical retail is going to be challenged. I think physical retail essentially goes away unless they meet one of two really important criteria. One is that they sell you something that you can't get online. So that would be a specialty retailer like Abercrombie and Fitch, who makes their own products. And the other is that they provide some type of service that you can't get online. So the easy one is paint matching at Home Depot. You just can't figure that out online. You'll never get it right. So you will go there and buy paint. And, obviously in the service category, you can get things that are so big, like lumber, that it doesn't make sense to order online, or a sofa that you must sit on before you buy because you're not going to buy something that's uncomfortable. So that's where Best Buy hopes to be saved, that you have to see a TV before you buy it, except that's just old person's logic. You don't need to see a TV before you buy it because you already have to. And so the third one, you know how it works, and if it's the same brand, you know what it is.
Yeah, it'd be kind of hard for a drone to deliver lumber to your front door too, right?
Yeah, 5 pound limit on that. But it could have delivered my car chargers.
Okay, it could. Just looking at the whole gaming arena, to me, it seems like a high percentage of gamers are male, and there's a whole female population out there. Are there companies that are trying to appeal to female gamers, or is it not a factor?
There's three groups of gamers. The console market is 250 million people, 260. So big, and yes, mostly male, probably 75-80% male. The mobile market is 1.5 billion large, and that's probably split right down the middle. And then the internet market, which would pick up social games and super hardcore online games, is 2.5 billion, and that's also probably 50-50 because social is dominated by women and hardcore is dominated by men. So I think that when people say the gaming market is largely male, they're talking about super hardcore dedicated console purchasers who say, I'm spending $500 on hardware just so I can play games. Of course that's a guy. But I think that the mobile market is definitely sex indifferent. I mean, they don't care at all, gender indifferent. Who's playing what, and those games are actually getting more and more and more sophisticated. And tablets are giving people a much richer experience because the screen is so big. It's intimate. It's on your lap. You can actually see everything, hear everything. So yeah, the guys in mobile that are dedicated or Glue Mobile and Gameloft, neither of them has really figured out the formula. So it's hard to say that they're going to really thrive. EA is larger, Electronic Arts, than both of them in mobile. But the guys who make the most money are one-hit wonders. So it's Gung Ho with Puzzles and Dragons, which is a public company. It's Supercell, with Clash of Clans, and they're in Finland, just sold half their company for 1.5 billion. That's 20 guys in a garage in Finland with 1.5 billion between them. It's the Angry Birds guys, which essentially have had one hit. So it's really hard to figure out the formula. Everybody sees these big hits and tries to replicate them and can't do it. It's King with Candy Crush, who is rumored to be filing for an IPO. I'm not sure what's going on there. It's been a while.
What about the Steam console? Have you? I was trying to ask some of the younger people, Benzinga here, about video games and stuff, and Chelsea mentioned the Steam console. Are you familiar with that?
Yeah, the Steam Box. It's a little tiny compact PC. I mean, really compact. It's like 5 inches by 5 inches, even smaller, I think. and it connects to your television and it connects to the internet. So it's the guts of an Xbox. I mean, it does the same thing. It runs Linux, which is odd, and it'll play PC games. It won't play Xbox games or PlayStation games or mobile games. And so I think and it's rumored to be coming out at $1,000 price point. So it's sort of like a super high end, Chromecast or super high end Roku box. I'm not sure why anybody except a hardcore PC gamer is going to buy it. That's a pretty big market. I mean, it's probably 30, 40 million people that fit that bill, and they'll sell 3 or 4 or 5 million of them. If Valve is making it decide to put their franchise title, which is Half-Life 3, on that box exclusively, it'll sell 10 million units, and it'll be something. But it doesn't look to me to be an alternative to a console, or an alternative to buying a cell phone, or an alternative to even having a PC for other reasons. So it's interesting, substantial niche, but I don't think it's going to be a threat to anything.
Okay, well, we've had Michael Pachter on, research analyst at Wedbush Securities, giving us his views on video games, social media, and digital media. Michael, I can't thank you enough for coming on. This has been a great interview, giving our investors and traders a lot of insights into the markets, and certainly would like to have you back again, perhaps after the new year.
It's very kind of you. Thank you. It was a pleasure to be here.
Thanks,
Okay.
Mike.